Hi, Ron. It's Stuart here again. Hope you are well. It's the first of our two broadcasts today. Big day, Wednesday, the 12th of March. We've got US CPI out in about 12 minutes' time. Sitting in the back of, President Trump with his announcements of extra tariffs or no extra tariffs. Ontario removed the idea about electrical surcharge going to the US, so he removed the extra tariffs he talked about yesterday, earlier in the day. I mean, it's absolutely crazy. Volatility is very well and truly back, thanks to the president and his entourage. So anyway, trade what you see, not what you think. The chart you can see here. Let me just get rid of my my big head. We want a bigger chart, don't we? Don't want my great big head stuck in there. There we are. Let's make the chart a bit bigger. There we are. I'm not trading that. So this is where we are at the moment. Big, strong rally for the euro. Obviously on the back of what was going on last week with regard to the Germans and the defence spending, complete fiscal rules getting chucked out the window by the Germans and other Europeans. So big rally for the euro from where we were down here at 104 all the way to 109 yesterday. We breached 109 yesterday, and interestingly, you can see the candle here. Hopefully you can. Yeah, my little charts, my little signs out the way. Hopefully, let me just make that a bit smaller. You'll be able to see it better. There we are. You can see that. Can move that on. Yeah, it's too far. That's too far. There we are. You can see that over 109 close yesterday. So we closed at 109, 8 points. We got as high as 109.30. Sorry, 109.45 yesterday. We're down currently today, but we're still hanging around that key 109 level. Obviously, 110 is the next big line in the sand as far as the euro is concerned. But the euro certainly bid on the weaker dollar that we've seen, courtesy of more talk about recession now and the impact of these tariffs or non-tariffs or big tariffs. They all came into effect last night. The first 25% on steel and aluminium. Aluminium, it's pronounced, not aluminium, not aluminum. My dear American friends, colleagues, cousins. So yeah, that's in place now for Mexico and Canada. The extra 25% I say was off, and now it's currently off because Ontario say quit adding tariff to their electricity they're exporting to the US. Still talking about the 41st state, 51st state. More on Canada in the next broadcast when we're looking at the Bank of Canada and Mark Carney's potential premiership. How long it's going to last? Well, it will last or not. But so far today, let's just come down to the daily time frame. The hourly time frame. So we've been there's that high on the euro of 109.45 yesterday. We were down into close. Sorry, we held positively above 109 to close. We were played with it this morning. So you intraday traders, that's our low today for the euro, 10888. Interesting little round number, isn't it? All the eights. So let's just stick that on there. That's our low for today. Our high for today is our horizontal rate is up here at 109.25.8. So that's our range going in to the key data of the week, the US inflation data. We just look at TIA on my apologies to the bosses of the proptrade.com, but the Forex factory calendar, the chart here just shows up the situation quite nicely. This is annualized CPI, the headline CPI number. The key number really is this core number. We'll come back to the core in a minute and why that's important compared to the headline. Strips out a lot of unnecessaries. So as you can see, we've had a big rally. It's a big rally. We had a surge in inflation. Summer of 2022, we went to close to 9% in the US. And since then, we've come down really nicely here to the beginning to the summer of 2023. Since then, we just haven't been able to make that next step lower. So there's that talk of sticky inflation, which we've talked about for years, really, in all my different guises of analyzing markets. The key thing, as we saw yesterday, was the fact that when we remember we were looking at the jolts about how where we are pre. It's 5 years since the COVID lockdowns across the world. This March, and so where are we in pre-COVID? If we take the COVID issue out, well, here we are. This is 2017, 2019. Inflation. We were talking about deflation. We were talking about inflation going away. It's a problem of the past. and we were down here under the key 2% level, 1.5, 1.7, 1.8. We spiked here as COVID was sort of starting to talk its way into our vernacular around about this 2.5%, and then it rocketed as the Fed and the US government reacted to the COVID crisis. So since I said we've come down quite aggressively, but we still remain very, very stubbornly not only above 2%, but around the 3% level. So today, I say we're expecting it to come off that psychological 3% level in about 5 or 6 minutes time. But the key number remains this core, the core number for the annualized basis, and the monthly number at, again, slipping to 0.3 of 1% from 0.4 of 1%. And the headline, the headline number 0.3 of 1% from 0.5 of 1%. So that's quite a significant decline. If we just go back to our calendar now, there's a bit more detail in it. So there's that core number 0.3 of 1% from 0.4. So the core headline, this is the really key number. I don't know why Forex Factory don't put on that now. All calendars are made equal. So 2.3%, that's what I'm really looking at. Is this going to continue to move down? And the headline 2.9%, as we saw on the other previous calendar, from 3%. February is traditionally post the season out, the end of winter, post the Christmas holidays, things start to go back into normalization. The sales are over typically in the Western Hemisphere, and the retailers particularly try to get some better prices. We'll see what that's looking like, see if it's remained sticky. The key numbers all the markets are looking for are these service sector inflation areas. So things like rent, second-hand car prices have been used all the time, but they're goods rather than services as an indicator of the performance of the US economy. Is a bit of an odd one. Second-hand cars, especially in America, crazy cars they have in America. So it's really the services sector. So rent, things around housing issues as well. So and obviously earnings we've seen has started to tweak a wee bit, but still remain very robust. So let's have a quick run through the rest of the markets ahead of the data, which is literally 5 minutes away. So can you see that? Okay, if I make that a full screen, can you still see the other side of the, just about, yeah. So this is the hourly time frame. Let's get rid of that. So we've been down this morning. There's our range. So and interestingly, in this last hour, we've been into the low of the day. So that might be getting tested here. Another area to look at, the 50-hour moving average sits there at 108.83 as well. So we want to watch that to the down as a potential downside level today. So stick that in there as well. We'll make that different color as the data comes out. So put that in there. Just change the color of that. Make it something we can all see. Make it actually make it blue like the blue of the 50 period. So let's make it a little blue there. So that's our potential downside level. So head of the head of the CPI, we are weaker on an intraday basis, but the daily chart remains positive, and the 4-hour chart, the time frame above this one, is in consolidation. So you can see there we are consolidating there. There's the 1 hour 50 period, and there's the 4-hour. And let's put this in as well for the sake of completeness. So that's the 20 period 4-hour moving average. Next key support there at what's that, 108.54.8, so by the 20, and obviously all the way down there we then will test the 108 level, big 100 odd pips away from where we are. We'll see how shocking the CPI is as well. So that was today's high, and obviously let's put in that recent all-time high as well while we're doing this. I'll put that in as a ray as well, but I'll make that a different color as well. I'll make that back to my pink. So that's our recent high. And if we just zoom, we just jump back up to the time frames, jump up to the weekly time frame, you can see, last time we were up here at 109.50.45 area was all the way back here. In fact, we got above this week here from November last year. So we're going further back. We're into October. So this is a new 5-month highs here for the euro dollar, we'll be seeing some profit taken. Well, we saw a bit of profit taken at 109, and we'll see where that goes. But let's just go back down to our trading time frame, our 5-minute time frame. That's been short from the high today. Big short here at 10:35. It went against us, but you'd have still been, depending where you had your stop loss, you'd started around about here, you'd still be short that. That's nicely bagged. And here, 5 minutes ago, again, we were testing that low of the day, that 188.79. So let's just bring in the calendar. We got 45 seconds to go. That's the euro. A quick flick to gold before the data. Well, a minute. Quick flick to gold before the data comes out. We'll do the same thing with gold. There's gold on the 5 minute, sort of sideways traction today. We're still long gold from seems like forever ago. It sort of nudges into profit, and then look at this. It's a bit of profit, but most of the time we've been out of the money, but we're still long gold. But let me just go back to the euro. It's probably the one that's really going to start hammering around. Look for buy option down here. I would guess if we're going to move it. So let's have a look how that's come through. Pending obviously some of the faster invites are through. It's not through on Forex Factory. Let's refresh this. This is relying on the internet, my friends. Futures are higher, stocks are higher. Nasdaq's bounced. Nasdaq 100's bounced 1% so far. US the DAX opened very positive on obviously that news of potential ceasefire deal that the Ukrainians have did. Anyway. So headline 2.8%. It's finally moved down, so it's better than expected. The monthly data is also better than expected. The core is coming at 0.2 of 1%. That's half of what it was in January at 0.4 of 1%, and the headline at 0.2 of 1%, also one tick better than expected. So consumer price is 0.2 of 1% month on month. That's a plus versus an expectation of plus 0.3 of 1%, 2.8%. For the headline. The core, let's have a look what, I'm going to have to refresh our whole calendar here, aren't I? Scroll down, get the details. Here, Wednesday, so this is the key one. So the core, month on month, 2.2 of 1%, as we said, and the core annualized is also ticked lower, 2 ticks lower than last month, a tick lower than expected, 3.1%. That is what the Fed will be looking for. We might be seeing this weakening. This is adding to this argument that potentially recession is around the clock. The jobs market is waning. Euro 109 here. I'm just on a Bloomberg terminal. I can't see my terminal. 109. Yeah, it's bounced. So 109.15. On our chart here. So there's that high of the day being taken out, my friends. Remember, 109.25. So thank you very much on that data. We are 1 minute in to the data. So the low of the day obviously still in play, but it's a positive move for the euro up again and a weakening dollar. We'll have a look at the, we haven't actually looked at the expectations for rate hikes and cuts. Well, saying hikes, rate cuts. It's increased with all this turbulence that's going on. Excuse me. Recently, so guys, if there's any else you want to have a look at, do let me know. I've just been focusing on the euro. I'm just going to flip through the other measures. I'm guessing sterling's done the same thing. Yeah, 129.70 for sterling. Sterling's a similar a positive move from that weakening of US inflation. Stocks will also be better, one would guess. The DAX position, I should have closed that out earlier, but anyway, would have. The DAX position would have jumped up as well. Actually, it's been down. So this is the DAX we put on last night. It's a bit of a tentative one. Show you. So we were short here. We're out of the money at the moment, and it's gone continuing out of the money. I might close that. See how how we cool down after the initial reaction from the inflation data, but the stop loss is up there. But yeah, it was a bit of a tentative one. Obviously, the positivity of the Ukrainian sort of Ukrainians accepting this 30 8-day ceasefire proposal for the Americans put on the table, the re-establishment of military aid and intelligence supplies from the US in reciprocal for that. So we're all back to where we were. It's now obviously balls in the Russians' court, but apparently he's going to speak directly with Putin. Trump, but we'll see. So yields are down a tad. The 10-year US 10-year is 427.21, as that's come down quite significantly. Of the declines they've had recently. DAX, so stocks generally are up off the floor. They've had the S&P 500 been down all day. We're rallying. Sorry, obviously we had this massive daily again. Sorry. Sort of huge sell-off we've had. Still very, very weak, but here we're back over the 50-hour moving average for the first time since the 5th of March, which is that's quite a lot of trading days back, where isn't it? It's the hourly chart, 50-hour moving average here, guys. First time we've got some buyers to take us back over that descending moving average. A bit early to tell, but that might be, the floor might be in. Too early to tell here. Last night at 6 o'clock, we went to 5533. 5533 for the S&P 500. Is that our low in? Who knows? There's obviously nibblers and buyers down here. So inflation cooling in the United States finally. However, if we just go back to the this you can see if it's going to refresh. Is that's March? Yeah, March data is in there, but as you can see, it's better than expected, as we've said here, at 2.8% compared to 2.9. So it's a tick, but if in the whole scheme of things, it's still relatively sticky. It's still 0.8% above where Powell and Co. want US CPI to be. Remember the Fed more focused on the CPE numbers rather than the CPI numbers, and they come out at the end of the month, and they were at the end of January they were cooler again, but this stickiness is still very clear in the day. So just again, just take a step back from the fact we've had this excitement of a beat, but we are still stuck around this level. We need to, they want it down here. They want it at this level we got to. Remember, we got under 2%, and we all got a bit excited here at the end of last year. I think it was October here. We came in at just under right on 2%. So consistency hasn't happened, and over the winter, it's continued to grind up. The story of the stickiness of inflation remains there. It's the and obviously the other key thing about this data today is this is for February. This is before the Trump tariff story started to kick in. So none of that impact has been captured by this data yet. None of the impact of the job losses in the government have had any impact on this yet. But obviously, importers in the US were front running the impending tariffs, so that inventories and stocks will be at high levels, and that's what we've seen ahead of the tariff imports. But it's going to be the US businesses, it's going to be the US consumer that ultimately pays this. I know Trump spins it that we're making trillions and billions of dollars from all these tariffs, and in simple terms that sounds like very positive, but ultimately that feeds through to the US consumer if he's wanting to buy these products that have been imported. Is it pushing manufacturers and services companies to move business into the United States? That's Trump's big aim. We had that story, I think it was last week or the week before, that Honda had moved some production of the Civic from Mexico to somewhere in Alabama. I think it was Alabama. Anyway, somewhere in the US, directly because of the tariffs on cars from Mexico being manufactured in Mexico. So, however, the cost of manufacture still remains much cheaper in Mexico. So, obviously, these global multinationals, we'll see what they swear. And again, yesterday he had his roundtable meeting with 100 business leaders yesterday, and that's when he was swinging, shooting from the hip again with regard to tariffs and more tariffs to come. This idea of universal tariffs on everybody reciprocal tariffs on everybody that trades with us, blah blah blah. So some countries that hadn't been in the crosshairs, very much in the crosshairs. The EU was again in his sights yesterday. So yeah, there we are. So inflation remains sticky. It's better than expected. We've got a weaker dollar on the back of that. We've got stocks higher and yields yields up a tad. Yeah, the yields have been treasuries have been down, have come back up a tad, so yields have gone back up. So let's have a look at everything else that's going on. So there's the stock market sort of giving up most of it, well, not giving up most of its gains. That's the 1 hour chart. So let's have a look at Let's go back to the 5 minute chart as we are now, sort of 10 minutes, about 5 minutes in. So initial surge in stocks took us to 5670 here for the S&P. We're sort of holding that thus far. So let's have a quick run through the others. Let's go back to the euro, see what's it's done. So there we go. As if by magic, my friends. So we tested our high for the day. Let's just zoom this into the hourly chart again, show what we did beforehand. Remember what we did beforehand? We were looking at the high of the day. This was the high from yesterday, this 109.45. We tested our high of the day. So sells there if it didn't hold, and that's exactly what it didn't hold. And now we've turned around and we're going back down again under the key 109 level. So obviously the other thing we did, we tested the low of the day, and we've won that currently, and we did test this key area here. So selling here, buying here, wherever you had that set up would have played out quite nicely, and we're back to even. But we are now, interestingly, I'd say we're literally 10 minutes into the data, but we have now breached the key psychological 109 level. So bias is to the downside. This hourly chart is still biased to the downside here. If you see the 30-minute chart, that'll still be biased to the downside also since the top this morning. Obviously, if you'd been trading that on this time frame, your stop loss would have been taken out. But if you're trading the actual news, what can we now assimilate 10 minutes in? Well, it's biased negative, isn't it, at the moment, because we're under 109. So you'd like to see a close of whatever time frame you're trading. You'd like to see this candle close above the psychological 109, and then any other resistances to the upside. So as a 30-minute trade, you'd been short, whether you closed it out before the date or not. Probably many traders do. What we're doing now, well, we're looking to get short, but again, if you're trading the 30-minute time frame, you've really got to wait for another 20 minutes before this 12:30 candle is complete. I mean, that's the rules. If you can't follow the rules, you shouldn't be trading. So that's still bias. So we're under 109, and we're in fact, if anything, we're going lower. So that's those two higher time frame areas, wasn't it? This was the 50 period on the 4 hour. Or was that on the 1 hour? I can't remember now. I think it was the 1 hour, wasn't it? This first blue line, this 180.82, and then this 108.57 was the 4 hour 20 period moving average, wasn't it? Let's just double check. That's what I'm talking rubbish. There we are. That's that one, and that's that one on the 1 hour. That's the 4 hour, and there's the 1 hour 50 period, which we've already tested. So we could, having bounced from that on the initial reaction, it could be a downside target still. But first would be the low of the day again. Are we going to, we've already poked lower below that, so that might be done for the day. We'll see. Obviously, there's lots of other, well, not lots of other data, some key data, but that's the main data for the United States today. We obviously got the Bank of Canada in little over an hour, a little less than an hour at the moment. So euro moving down. Let's have a quick look through the other majors. Aussie is having a go at .63. We're still sort of a bit of a sideways action here today. Dollar CAD, which we are still long. I think we still got a position in that. We took a, or did we? I can't remember. That was entry. Stop loss should have been taken out. That's still, I can't remember if that's still. I think we closed that completely. I can't remember. So let's have a quick check. DAX, Euro, and gold remain open. CAD hit position fully closed. No, we closed the. There we are. That's what I put up. And you should. There we are. That was the trade from this morning. We took 31 pips out of that. and we've closed it, and it's reversed obviously ahead of the Bank of Canada. Whoops, where's it gone? Out of the Bank of Canada. So that's our 31 pips from last night. Our entry was down here. We got it in here, and that's reversed. So again, that's now short, and it's been added to because of the weakness of the dollar because of the CPI data. So that's going down. Interesting where our stop loss was. That's tested into this cluster again. 143. 68 was a test to the downside. Dollar yen will also be having bounced here. If we look at the 5-minute reaction, big spike lower, but that's been all bought back, interestingly. Dollar yen, so dollar yen 148.80 at the moment, and here on the short-term basis today has been angling higher. Interesting, we have got a weaker euro, weaker yen. We'll go through our open positions now and at the next broadcast. So yeah, dollar yen 148.90. We haven't got quite to 149 today. Lots of volatility around the CPI data, moving lower. Dollar Swissy was doing. Again, we were looking to add to this on Monday, weren't we? Short, we didn't. It's sort of turning around at those lows. So I said we are out on that on Friday. Some nice profits on that. So it was up Monday, up Tuesday. Very small candles and still engulfed by Friday's sell-off. So still not looking to that to move higher. That still could easily loop low. MACD still very weak there for the Swissy, currently trading. 0.8825 for the Swissy under its 5-day, 9-day, and 20-day moving average. That's still aligned to the downside. Let's go back to the others that we look at on a daily basis. Crypto, the leader, Bitcoin 83,500 this morning. There's our low again, which we talked about this week again from pre the strategic reserve, and that's disappointing as far as the market's concerned. But we've been in 78 again. We went to 76.50 yesterday, and we've seen some buyers into close yesterday, and we're currently over 80,000, 83,000. So we've got a weak bounce at the moment, and that's just might be that dead cat bounce, catch a falling knife, all that vernacular. So yeah, see, it's still weak. 20-day moving average all the way up there, 87,800 for Bitcoin. So yeah, some bottom fishes potentially going on down there, flattening out of the MACD and the signal line, interestingly there, and also flattening out of the RSI. There's no more downside given the 2 updates, but it could easily, anything could happen there. But you would argue that the news for round crypto, Bitcoin in particular, is likely to be more positive than all the negativity is probably in there now. I'm saying that from a fundamental news point of view, knowing how the president swings, but we'll see what happens. So Bitcoin up yesterday, relatively positive today at 83,500 or 82,400, but nothing to get too excited about for Billy Bitcoin. Energies, oil has come back a bit, 67.24, but the downtrend is still very much in place. There's that low we talked about earlier in the week, the 65.50 zone. We tested it. We just talked about it yesterday, and we tested it again yesterday. We did finish positively yesterday, but we gave up the last time we looked at this, we were over $67, weren't we? Yesterday we closed at 66.50. So quite a significant decline from that key 67, but we're now back to it again today. So I'll see how today closes. 67, the key line this time. We talked about that last week, yesterday, didn't we? There's that key. That's why it's so key here from this lows at the end of last year, and there was that intraday low that we have just tested again this week and last week at that 65.50 level. So oil remains weak to the downside. It's what the president wants, a weaker oil price, obviously. Feel good factor. And yeah, let's have a quick just look at the open positions that were still got open, and I can't remember what they are off the top of my head. I'll have to find Is it here? So we are. So the dollar CAD was closed. DAX is still up. We just had a look at the DAX a minute ago. Euro yen is still half open. I've pulled the stop loss up to. We had 29 and half points on that. 58.9. We're taking half of that off. That's still live. Let's have a look at how that crosses. So euro yen. So we want euro JPY. What's that looking like? So there we are. We're still positive. Our stop loss is where the target is now. So we've got a minimum of another 30 pips in the bag on that one. I don't know why that white line, that big thick blue line's there at 163.20 or 0.918. It's usually there for a good reason. I couldn't, when I looked at this earlier, I couldn't see why. It just seems a bit arbitrary, but it's not. It's a bit of resistance there, isn't it? From a long time ago here on the daily timer. It's not, I'm not sure that's still relevant. But anyway, my stop loss is here. If we reverse later on, we still got 30 pips to the good. We'll have a look at that. It's an end of day basis, remember, so I'm only interested in looking at this really. The rules are the end of the day, but you know, it's still positive. We've got a nice rising RSI, we've got a nice rising MACD signal line, positive, big green histogram there on my MACD and my RSI, so that's all still positive. We're above the 50-day, nicely, hugely above the 20-day. That's looking, you know, it could have another go at that 63 plus area, so I'd just stay in that one until it tells me otherwise, till it reverses and takes me out. So that's nice and positive still from last night. Dollar CAD we're out of. Euro CAD is still open. Euro Swiss gold and DAX. Euro Swiss might be it's a bit squiffy. The target looked massive yesterday, but you know, system says do as the system says. It's all about process. It did look at very quite aggressive. If we look into this, is a daily, guys. So my target. The system had put a target that we haven't traded to up here at 96.70 since the summer of last year when we come down. There's that. That's why the target was put there. It's obviously a support area, a resistance area. So it was a bit of a call, having had a big strong day and a big strong day on the 5th. So we had a big strong day again yesterday, but it's come back down. But euro still in the sway, but that's now back to. No, it's actually out of the money at the moment, Euro Swiss, but that's still open. It's an end of day one. It's only been on since yesterday. See how it pans out over the next few days. So they're the open positions currently on an end of day basis that I still have. The DAX, the Euro Swiss, and gold. DAX out of the money, Euro Swiss a little bit out of the money, gold sort of in the money, I think, at the moment, and Euro Yen nicely in the money as well. So overall, we've had a good week so far. Where are we this week? We're up until the close of yesterday, we were plus 80 points, and we've made 60 points this morning. So we're up 140 points at the moment. Or you know, percentage-wise, it's equivalent. Obviously, the DAX, they're big numbers when we're trading the indexes, but percentage-wise, it's the same risk level. So the numbers, I half them because the numbers are too big. Just when we're comparing like for like, I will do it in a percentage basis as well. So there we go. It's 10 to 1. I will be back shortly for the. Let me leave you with that. In fact, let me leave you with the. For the Bank of Canada announcement, expected a 25 basis points cut, but more on that when we get that. What's our euro doing? So let's go back to our 5-minute reaction to the data. So there we go. We were all the way up. It was initially a negative dollar on the cut on the unexpected surprise, weaker inflation. That's been reversed. We wanted to go low. It didn't want to go low, and we're sort of back where we were. But the trend. Let's take these two big candles out, guys. The trend here, even on this 5-minute time frame, remains rather negative, given that we're even in this 5-minute time frame, given that we're still under 109 and we're under the 20 period moving average on this 5-minute. So bias is to the downside, but obviously on a 5-minute chart, you're going against the higher time frame trend, guys. So bear that in mind as well, because the hourly chart, actually the hourly chart has rolled over. So today, so you're with the intraday trend to the downside. We have to go to our 4-hour chart before we see still a positive, but that is in consolidation, isn't it, around the 109. So daily still positive. 4 hours consolidating. 1 hour has rolled over since 9 o'clock this morning, and bias low, and our intraday time frames 15, 10. They'll all be edging to the downside with some key areas. So obviously the higher time frame is this next level here, this 108.83 to the downside, may prove a key resistance level. So far we've bounced off it, but that's your downside target, I would say. Futures are looking really strong. Nasdaq 100 up 1.6% now. S&P up 1.15, and the Russell, the wider Russell. We don't have the wider Russell, but it's smaller, much smaller companies. That's up over 1% as well. So stocks getting some bid, and finally, gold still sideways action. There we are. It's not. I'm a little bit in the money on that gold trade, but again, consolidating. See, nice consolidation, holding here 20. We go up to the 4 hour. Might be biased a bit to the upside. There we are. 4 hours biased to the upside. The daily, I nearly got out of it the other day as it came down here on Monday. Reversed nicely yesterday. Well, reversed, not nicely, but reversed yesterday. So it's still biased. We're up the 20-day moving average. We're over the 2,900 level, and we're just about above my entry point at 2,917 for gold. So gold's not really doing very much. It's all about the forex today. Next up, my friends, we'll be focusing on the Canadian crosses, dollar CAD. Let's leave you with that. On expectations of a rate cut from the Canadian central bank that's been as low as 143.68. Our stop loss from our end of day trades yesterday. We're currently trading at 143, 144 is where we're pivoting. But again, another one, as you can see here, quite nicely bias to the downside on the short term. So I will see you again in what time are we on? 1:30 for the 1:45. Give me time to eat my omelette, which is sat here. It's gone quite cold. The spinach looks quite nice. The mushrooms look quite nice, but the egg omelette looks a bit. But anyway, such is bad timing. So 1:30. I'll see you for the Bank of Canada announcement. Take care. Be safe. See you in a minute. I'll see you in 30 minutes. All the best, everyone. Bye bye.